Journals over 20% off the newsstand price. Subscribe to the Journal and get a daily view of the whole world of business and how it affects you. Information you know you should know. Call now, and you'll be ready next time someone asks you, are munis always a safe investment?
I'm not sure.
Call toll-free 800-942-3200 for 13 weeks of the Wall Street Journal and your free video on money and markets. That's 800-942-3200.
Attention futures traders. Would you like to pay only $10 per round turn trade? It's easy with First American's First Month program. First American's First Month is simple. Just open an account at First American and you'll trade for only $10 per round turn for an entire month. Even when this program ends, your savings won't, because First American is committed to aggressive commission rates. Our regular discount commission is only $25 per round turn. And we give you the services you need. Exchange minimum margins, 24-hour service, quality fills, and more, all delivered to you by a responsive, well-trained staff. First American's First Month. It's a great chance to try First American for only $10 per round turn. Open your First American account today. Call 1-800-621-4415. That's 1-800-621-4415.
This opening portion of Market Wrap is sponsored by The Travelers. You're better off under the umbrella.
Good afternoon, everybody. Welcome to the Thursday edition of Market Wrap. I'm Bill Griffith.
And I'm Neil Cavuto. Here's what's happening. On again, off again talk of a potential tax cut, sending bond prices on a roller coaster ride today. Prices began sliding in early afternoon trading amid reports that the White House favored a tax incentive plan by Republican Senators Arlen Specter and Pete Domenici. A plan that many say, according to our Washington correspondent Donald Vandermark, was really originally egged by Labor Secretary Lynn Martin. Whatever the case, the plan, which would allow tax-free use of IRA money to fund big-ticket items like automobiles, later officially poo-pooed by the White House, but not before bonds fell nearly a point on just the hint of a deficit-busting tax cut. Bond prices have been stuck in a rut of late on fears of congressional meddling in everything from bank card interest rates to tax breaks for the middle class, which would fuel inflation. But shorter-term rates have been declining as buyers of T-bills bet on an imminent cut in interest rates. All that has produced the steepest yield curve that we have seen since the Persian Gulf War. Let's check today's long bond trading right now, down 3/4 of a point at par in 13/30 seconds, and the yield is getting awfully close once again to 8%.
Stock market parted ways with the bond market, though, rising despite economic news early on. Let's look at the unofficial numbers. We had some programs selling near the close of trading today, and it pushed the Dow down 1/4 point at 29.29, although we're starting to come back again. My computer has us up 2 points, so rather volatile in a narrow range on the close today. Transports up 11.40 at 1214.13, and the Dow Utilities average was up 3/4 of a point at 214.57. The advances led the declines on the close by a slim 8-7 margin. It was like that all day today with 521 issues unchanged. And the broader market averages eking out gains on the day. The Standard & Poor's 500 index up 1.15. The American Stock Exchange average up almost a full point. And the NASDAQ over-the-counter composite index gained almost 4 points today at 530.11.
The Labor Department has issued one of the more pronounced indications of the continuing economic slowdown. First-time claims for unemployment benefits surging to 493,000 for the latest reporting week. That is a jump of 39,000, and it's the highest level we've seen in 7 months. It was the 3rd straight weekly increase in claims. Claims had peaked at about 500,000 during the spring and then came down during the summer. The latest trend, however, does not bode well for the widely followed monthly employment report. The November numbers are due out December 6th.
A new survey of economists says that while we may avoid a double-dip recession, economic growth will still be very sluggish.
The health of the economy is pathetic.
That from, in a word, economist Lynn Michaelis, one of the members of the National Association of Business Economists, who today are predicting fourth quarter GNP will be roughly 2% on an annualized basis. That is down from 2.4% in the third quarter. At the same time, they are predicting growth of only 3% for all of next year. Now, the last time this survey was conducted 3 months ago, the economists said the lack of Fed easing had prolonged the recession. But since then, of course, interest rates have dropped precipitously. So this time, the economists say the main culprit is the high degree of consumer debt still out there. The one bright spot, according to the survey, though, new home construction is expected to rise 20% next year.
Joining us now from our Wall Street Bureau with his read on today's market activity is Joseph Battipaglia. He is Director of Research with Grontal & Company. Hi, Joe.
Good afternoon.
All right, we've had two relatively calm days in a row now after what has been a rather raucous few sessions. Should we read stability now into the market, or what do you think?
No, I don't think so. In fact, if anything, the market is very confused. Clearly, you could only go so far in hoping that rate cuts would get the economy going, pushing stock prices further higher. And then once you realize how far out of line you are relative to where the economy is, you retrace. Now the question has become, well, does the economy slow down further and perhaps continue a recessionary trend, which would mean a further move down in the stock market?
What do you think?
My own view is that the economy will stabilize with barely perceptible growth. And what will happen is we'll get more lead balloons coming out of Washington, not trial balloons, lead balloons, like the one today about rebates on buying American cars. You can't have it both ways. You can't have a president say the economy is back to growth and yet come up with programs to try to get growth because it's really not there. Same is true with stocks. You can't pay ever higher prices if the earnings aren't there. That's the dilemma. Low rates help. It keeps you up at a high level, but it doesn't get you that much further. That's what we're faced with right now.
All right, so in your eyes then, we're roughly at levels in this Dow at 29.32. I mean, do you recognize the 28.50 support level, the 29.10 sort of next month in this market, and then what?
I look at it from the perspective of what investment horizon do I have? And my horizon is that interest rates will go lower still, and if anything, not go higher. Secondarily, the economy will grow slowly. From that comes the question, what sectors, what groups do I buy? Clearly pharmaceuticals, clearly healthcare services, telecommunications, international companies such as in Mexico, which we've highlighted, high-yield bonds, intermediate-term bonds, municipals, corporates. That's where I'm staying focused, because even if the market does sink in the general sense, I'm more than willing to buy the quality issues that will perform in 92. The cyclicals, the autos, forget them. They won't perform, and therefore any rallies, I'd sell them if I still had them.
All right, but still some of those very issues that you alluded to in the pharmaceutical and other areas are the ones that many analysts will say are ripe for a hit if this market falls much further.
Well, let's look at that. Merck would be a classic example. It has risen tremendously in 1991, yet for a chance to correct with the market, it barely budged. In fact, if you check your records, it hit a new high, I think it was yesterday.
Well, some would argue there, Joe, in the case yesterday and again today, that it's overreacting on some drug-related news.
No, what it is a reaction to is that there's a company doing something to build their business in a recession. Drug companies do that. They introduce new products. They open markets abroad. They're able to raise prices because there's an insensitivity to the price. That's how a company can grow the earnings, and that's why an investor will keep paying higher prices for them.
All right, now, in the meantime, I know you're a purveyor of some good junk bonds. There are some stats out from the likes of Solomon Brothers that show that the latest high-yield numbers do not look very good, and that we continue to see the likes of bankruptcies and failures. Are you worried by at least the flames around the junk bond pickings?
Well, I think it's going to present another good opportunity to get into the quality issues. Those companies that have made the ascendancy, in our opinion, that are on solid credit quality footing, those bonds have barely budged, and they'll stay as so-so performers going forward incrementally. Now I'm looking at those ones we've overlooked in the past because we thought they were rich. We think we'll get another shot at them. I haven't got any new names for you, but I think we're going to have a great variety to pick from in the next 3 months.
Okay, Joe, thank you very much. As always, a real pleasure having you. Joseph Battipaglia, Director of Research with Grontal & Company.
We're going to take a break right now. When we come back, the Resolution Trust Corporation is kicking off its latest asset sale at this hour. Jerry Cobb has details when we come back.
And don't forget that the Dorfman report is still ahead at this hour. Dan's focus today, overpriced stocks. Market Wrap returns in just a moment.
this umbrella. Those who carry the Travelers carry the choice of 50% of the Fortune 500 for property and casualty insurance that can help reduce claims and control cost. A full portfolio of pension fund investment options and one of America's largest healthcare networks. Open in case you want quality and service the Traveler's way. You're better off under the umbrella.
One company knows the global market so well that it brings you investment opportunities from America and around the world. With a family